All right. Good morning, traders. Sorry for the sound of my coffee maker in the background. Boy, that's loud. Good morning, traders. Today is 12/2/22. My name is Charles, and this is the Pirate Traders live stream. The question on everybody's mind: did we just reject off the downtrend that has been plaguing this market since the all-time highs? Are we officially still in a bear market? Well, if we are, and that rejection off of the trend line that I'm now showing you on the screen, if that holds and we can't get back up into yesterday's range, that is extremely bearish to see. So let's dive right into the charts and see how we want to look at the range today. Obviously, this is a reaction to the non-farm payroll numbers, which were worse than expected. Okay, so we've got a gap down. The first order of business is for the market to try to fill the gap to get up to yesterday's low at 40.5450. If the market is able to get to yesterday's low and it finds resistance there and it can't get back up into yesterday's range above 54, that is bearish as what is called a gap and go to the downside. If the market pushes its way up and tries to get to yesterday's high and can't get there and it turns around and heads lower, that is also a gap and go. A gap and go to the downside would be very, very bearish. Okay. If they're able to push their way up to yesterday's low, and then get into yesterday's range, well, then we can kind of see the move as neutral, right? We can assume it was just a liquidation that was caused due to the news. And now that the regular trading hours has had a chance to absorb that information, I mean, to me, it's almost bullish, right? It means that the Fed doesn't have to keep raising interest rates as much. So maybe the market takes a minute to think about it and they change their mind. They're not so bearish. And so the signal to us of that is if the market can get back up into yesterday's range. So if it can get back up to yesterday's low, get up in the range, and then find support for continuation. So yesterday's low at 54 will be very, very important. If we find resistance there, it's bearish for continuation lower. But if we can push above it and find support, we can go test basically the breaking point, the base of these single prints, 66. That's also, right where the major node of time and volume from yesterday and the overnight is. So we can look to test from there to there and see what happens. Okay. Getting through this is obviously bullish for continuation. It was just a liquidation break, no problem. We keep going. If resistance holds here, we may just go sideways, which might set us up to go through this trend line on the daily going sideways. So if we can pull back up into yesterday's range, but then we don't really get through that resistance, we could still be setting up to go sideways through this trend line, which would be acceptable. So that would be not bullish, but not bearish, so to speak. And of course, as soon as we pass back through the opening price, it gets extremely bearish as a gap and go. So essentially, we're just playing the game of where do they find resistance? Where do they find support? Oh, it's also worth noting this is a retest of the previous balance area high. That we just broke out of. And that's not uncommon as well. You balance in an area, you break out, you come back, you back test that balance area, and then you get continuation. So yeah, let's see what the market's got. It may just react to this and push right back up. First question, can it get to yesterday's low? Second question, can it hold above it? Third question, can it get through this resistance? Then we look for continuation. please smash that like button if you can. Also, the subscribe and the notification bell while you're at it. It's fun. Give it a go. Novice trader, do you read anything from the spike from Wednesday? Like the base of the spike? No, not anymore. Yeah, I take it back. That could have been support potentially on the way down, but because this happened so quick in the overnight, they just blew right through it. But once they pass through it, no, it's no longer a reference. All right, so far this is pretty bearish, and I'll just walk you through why. The ticks opened, extremely bearish. Okay, because obviously the sell-off happened in the overnight, and so right when the market opens, boom, they're like way down there. And they worked really, really hard to try to get their way back to the zero line. Okay, that's normal. That's what we'd expect. That's what we call a counter auction. Or, it's sort of a retracing of the liquidation that happened because of the news. So that's what we would expect. But interestingly enough, while the ticks are working their way back to the zero line, price hasn't even been able to fill the gap. So that tells us that the momentum to the upside is more people who got short in here, the FOMO sellers, getting squeezed out, than necessarily new buyers trying to take the market higher. And that makes me think what's going to happen is once we get back to the zero line, at whatever point they get those ticks back to the zero line, the sellers are really going to come in. So that's a little bit bearish to see. They're still trying to fill that gap, though. They still got a good target to the upside. But the question is, are there sellers waiting there? All right, well, this resistance is holding for the moment. That's bearish to see. The high is weak, as it was all sellers. But if they can't even fill the gap, it's starting to look like a gap and go, which would be bearish. They will also, if they start to pull back down below 35 here, they will be pulling back into a previous balance area. So if we push back down here again near the lows of today, and we start spending some time down here, we significantly increase the odds that once again we are passing to the opposite end of balance. The same way getting above it here gave us the momentum to head to this end, below here gave us the momentum to head to this end, and vice versa. If we push back into this balance area once again, it can give us the momentum to head back to the opposite end of balance. So it becomes very, very bearish here if we do get a gap and go. All right, well, there's no two ways about it. I'm beginning to feel bearish here. If we pop below this balance area high, I will become bearish as long as we stay below halfback. And I'll be looking to see, can we pass back through the opening price? Passing back through the opening price officially makes it a gap and go, which is bearish. Okay, there it is. So now I'm looking for halfback to hold as resistance. RK says buyers coming in. Well, we don't know, obviously, right? These could well be the sellers. These could be the FOMO sellers that piled in here, and they're giving up on it. They were hoping we were going to open and go straight down. And so slowly but surely, they're just giving up on it. We'll find out if there's real buyers when we get back to the zero line on the ticks. And we don't even seem to be able to do that. They just keep getting slapped down. Design knob Q is spiky? What does that mean? Does that mean that the deer are out with their guns? I don't understand. Q is literally in exactly the same place as the ES. You had that liquidation. You push back up. You could not fill the gap, and you're getting ready to pass back through the opening price. It's almost a gap and go. Q is perfectly in line with the ES. All right, testing that half back again for resistance. I'm going to remain bearish here, actually, as long as we're below 43. Just because, again, I really feel like we got to get those ticks back to the zero line to find out who's really in charge. And if we got them all the way back to the zero line without filling the gap, I mean, that's just bearish. There's no two ways about it. Scott, how nice of them to pop it up for me to reshort. Now, if buyers could kindly step in front of a bus, well, that would have been those buyers. That pop up, that was the bus steppers. Now the question is the bus coming? I just know it's actually a weak low as well. Weak on both sides of the market. So again, I just want to really make the point. The more time we spend below 35, the more time we spend down here, the more and more bearish it becomes. Okay? That increases the odds that we're heading lower to the opposite end of balance. So if the buyers do not want that to happen, they want to keep the market up above that balance area. They don't want to keep hanging out down here, because the more time they spend, the more and more sellers they're going to convince to join the party, and the lower the price is going to go. It's now or never. Go fill the gap. Or back in balance and take a crap. Well, here they go. They're trying. They're trying. Okay, so now we're going to see what happens when the ticks get to the zero line. Are there really new buyers? Kathy, was there 8:30 news? Yeah, the non-farm payroll numbers came out. They were like significantly worse than expected, which I think is actually a good thing. But anyway, everybody has their own opinion. Yeah, I mean, they were guessing it would only be 200,000 and it was 260. A whole 2,000 more than the last time. Probably all from Twitter. $6 million man, 10:15 Fed Evans speech. Say it ain't so. Okay, so how hard have these buyers worked How desperately hard have they been buying and buying and buying and trying to fill that gap? I wonder where they've been putting their stops. You know, all these traders who got long up here, the traders that are getting long right now in here, the ones that were just getting long down here, I wonder where are they putting their stops? I wonder if it could be right down here, just below the opening price. What would happen if suddenly the market came down there? Food for thought. Can that zero line on the ticks hold? RK, shadow closing on TOS 1231. You mean the what's it called? Brad's like, what is it called? Squawk box. The squawk box is gone? Oh, that's kind of sad to hear. Oh, well. Yeah, more for me. I'm sure they're coming up with some sort of alternative. Probably trying to find a way to monetize it like I do. You know what I mean? But if you wouldn't mind, I sure would love if while you're in the chat there, one day you were to randomly mention, oh, yeah, there's this other guy. Charles, he does this too. All right. Well, I don't think I'm wrong about being bearish, but I was early. So I'm back to neutral. Just because they're keeping those ticks above the zero line and they're above halfback, there is a chance they could head up to fill that gap. I will get bearish when we're back inside, back below 40.35, back inside the previous bounce area. But for now, there's a chance the buyers might want to fill that gap first. Morty, Peter's got to pay for that giant wall monitor. I liked that thing. I thought it was cool. I always felt like it was probably like a drunk purchase, you know, or like a high purchase. Like one day he just like, you know, smoked a joint with a friend and then was like, you know what I should do? I should just buy like a giant TV and put the chart on there, and then I can just draw on the TV. And then he did it. He went on Amazon and he did it. Morty, me too. I thought his videos got much better. Then he stopped doing them. I think he'll come back. I don't think he'll stop forever. Christine, thank you. Thank you for the sub. Welcome. All right, so those ticks rejected once again. Market failed to fill the gap once again. So again, we find ourselves asking the question, all these buyers that just keep buying here and they keep buying here, where are they putting their stops? The market loves to go where there's liquidity waiting. And the more and more buyers that convince themselves they're going to fill the gap, the more and more liquidity that builds up down here. And the more and more times they fail to fill the gap, the more and more likely those buyers give up. And what happens when they do? Okay, so now once again, I'm looking for resistance at the halfback. If that holds, I'll get bearish again. All right, round two, bearish once again. Can they hold it? So those buyers, they've tried multiple times now to step in and go fill that gap. And they have failed every time. So they're going to try one last time. But if they fail again, is there really going to be more buyers waiting for another round? And tick smack down once again. Third attempt. Here comes the fourth. Do we think that we can... Come on, buyers. We can do this all day. So the buyers are going to step in once again. They're going to get nothing for it. Are there buyers waiting? Do they want to keep trying? And over I say to myself, when they do get in, where are their stops? All right, well, this time the ticks are not getting smacked down. Fuck. I'm so sorry, guys. It is rare this happens to me twice in a row. But it appears I am early once again. They are trying to fill that gap. So I'm back to neutral. Ed says, is time running out for the bears? Yes, sir. In the same way it was bearish that we were spending time down here, it is now less bearish. It's not quite bullish yet because we're not, like I said, we have to get up in yesterday's range to get bullish. But it's less bearish that we're spending time above that balance area high because it increases the odds that maybe this was just a back test. And now we're looking to spring higher. So now we're into gap fill territory. Can they fill the gap? If they do, can they find support up here or do they reject lower? So for the bears, It's getting worse and worse. This is their chance on the gap fill to smack the market down. Data thinking about shorting somewhere around the overnight high? No, sir. If you want to short, this is the moment. Yesterday's low, the gap and go, right? The getting to get back to yesterday's range and failing to get back up inside of it, that's the short. Once we get back inside yesterday's range, it's bullish, dude. By the time we get to the overnight high, they've worked their way through the only resistance above the market. Okay? It's blue skies from there. And they just had a back test of a balance area and a breakout. So if you're looking to short the market, literally this is the moment. But up here, the odds are significantly against you. The bulls are in charge if they can get up there. What you're seeing is this, like you're looking at this and you're looking, ooh, this looks like strong resistance. That's what this was. You know what I mean? Uncertainty, two-sided trade, bad news, breaks lower, change in the market. If the market's going to go lower, this is it. This is the moment. That bad news from the CPI will continue the momentum down. They won't completely reverse all of that, get back to where we were yesterday, and then suddenly decide they're bearish. That doesn't make any sense. They were perfectly happy to do business up here yesterday. That was literally the fairest price to do business. It was right there. So they have no problem doing business up here until suddenly that news came out and then there was a change in the market. So that's what we're playing right now, is that new change being bearish. And it is so as long as they fail to get back up in yesterday's range. Obviously, B period high is considered weak here because it is one tick away from a gap fill. So that's two magnets back to back. Johnny, why can it not still be a gap and go to the downside? It is at this moment still a gap and go to the downside. The banner bearishness is willing to be in a trade bearish, but I am bearish in terms of where I think the market is going to go, unless we can get into yesterday's range and then find new buyers up there. That's what I've been saying all morning. There's nothing bullish until that. Until that, we assume the momentum from this break is going to continue lower. But it's too early to trade it right now. It was okay to trade it when the market was looking like it was going to break, when there was a reason for these buyers in here to fail and the market to go lower because they failed, but they did not fail. They succeeded. And so now we have to just let them have their time, let the bulls have their moment to get back to yesterday's low. Then we find out who's in charge from there. Does that make sense? So the bearish banner was to look for a trade opportunity, but the thing that was telling me to take that is gone now. There will be another one shortly, right here at the gap fill. Jay said, just spoke to Peter and they're not going away. Oh, well, there you go. Must have been a rumor. Mackie Max, are the lines I draw a window trader? No, that's like a separate app called Epic Pen. It just draws over the whole screen. Because it's epic. Epic Pen. Dun. Well, it feels like we're stuck in a ping-pong range here, ladies and gentlemen. When you look at the book map and it looks like this, the market's just kind of bouncing up and down in a range, and it's all stops and icebergs on either end. It's just the bots playing a game, squeezing short-term traders for what they can get. So I think this ping-pong is going to continue until we either get up into yesterday's range or we pass through the opening price to the downside. I do believe that this, what was the gap, is now a chop zone. Dun, 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 dun. I think they're chopping it up. They got weakness on both ends. They've now accumulated very large numbers of stops on both ends. Okay? They got the gap fill buyers to pile in with stops down here below a week low. And they now got the sellers that were front running the gap and go trade to the downside with their stops up here and a week high. So they can just play tug-of-war with the market and just keep getting people to go long, squeezing them out, getting them short, squeezing them out until one of these levels breaks. We either get into yesterday's range or we go back through the opening price. Until then, we're going to chop it up. NAP 4044 is the 200 daily. Yeah, sir, around about there. 46 maybe. Looks like we're dancing on it right now. I don't think that's going to be much help intraday. We got to wait to see what happens by the end of the day. Do we close above it or below it? If we close above it, we know it was support. If we close below it, we know it was resistance. But right now, we can't tell. Sometimes you got to wait for the end of the day to get the signal from the daily. But I can tell you the signal from the intradaily is chopping it up. Jay says internals very weak. I would say internals not really giving a clear signal. If that's what you mean by weak, yes. Right now, they look like they're starting to build momentum. But it's just unconfirmed, right? We got a trend up in all four. But the breadth and the advancers versus decliners haven't even gotten above their zero line. And the ticks haven't been able to stay above their zero line. So there's just really no information. It's like they're trying to get bullish, but not yet. Jay, 4054 battle line for me now. Yeah, that's what I'm talking about. Yesterday's low and today's opening price. That's where the decision making is going to take place, right? They're either going to break through the opening price looking to head lower, or they're going to get up into yesterday's range looking to stay up in there, bring new buyers up. But because they've got the market stuck in the middle, because they got tons of buyers who stepped in here looking to fill the gap, but they didn't let it fill. They, of course, brought it to exactly one tick before letting it fill. Because all the buyers, right, they had their target at the fill. So now all those buyers are frustrated. And what do? They bring it right back to their opening price. They start squeezing those buyers. Squeeze them. Don't quite let them win. Take their money away. And now they're going to do the same thing to the sellers in the other direction. Those people that got short there, put their stops up here. They're looking to pass back through the opening price. They're looking to take the market lower. But what's the market going to do? It's going to find support in here. Here it goes. And it's going to come back up. And then they're going to get freaking squeezed. Like, ugh, damn it. Yeah, I'm not winning. And the market, as long as it can stay, we can literally see it on the book map. Okay, just look at the bots. You see where those stops are filling? As long as they can keep it below yesterday's low and above the opening price, they can just keep that tug of war going and just keep eating your stops, taking your money, and they don't even have to move the market. The market's not even going anywhere. It's freaking brilliant. Jono says that's smart of the bots or the people that program them. Well, that's the question. That's where I put my tinfoil hat on. And I say, did somebody come up with all of this and write the code and the computer is just doing what it's told? Or is this AI? Is this a computer that's just been told, hey, you take your time there, AI machine, and you study how humans like to trade, and then you figure out how to take their money. And the AI is like, oh, I know how to do it. Open with a gap down, target getting to the gap fill. But then I make them stop right before it. And then I bring it back. And like the bot just figured out, dude, I know how to do it. You know what it reminds me of? It's the story of the chess thing. So if you guys don't know the story about chess, basically they invented a computer program to play chess, okay? By teaching it all the rules of all the things that humans have ever used to play chess. That's how they programmed the bot to do what it was doing. And then the computer learned to outplay humans. It very quickly got to a point where no human on planet Earth could beat a computer at chess. It could always outplay the greatest minds on planet Earth in chess. Okay, great. So then for years and years, they developed those softwares and they got really clever and it was fine. And then they decided to take AI, a group of researchers working on AI. I forget which one it was. It may have been IBM's. Anyway, one of them took, this was like I think 2018, 2019, something like that. They took chess and they decided to use that as a way to test the AI. So these were not chess people. These were AI people. These were engineers who were working on making AI better. And they chose to use chess as a mechanism to work with it and test it out. So what they did was, instead of programming it like they did the original chess programs, where they, taught it all the chess moves that humans have figured out throughout time, all they did was they just told the AI the rules of chess. They were like, okay, AI, you just play chess. You do your thing. And these are the rules, and you play it however you want. And so they ran the program. I think it was something like 16 minutes or 11 minutes or something like that. It took for the AI to think about the rules of chess. They put in the rules, pushed, compute, And the AI thought about it for about 11 minutes, okay, or 16, something like that. And then they put the AI against the traditional computer, okay? They had the AI computer play against the computer that's programmed based on human interaction. They did it for like a day. I mean, it was literally just like one simple, like they just kept running the program, kept running the two of them against each other, going back and forth and back and forth. And then in the end, the AI won every single chess game. And when humans, and so the AI people, the people that were programming the AI, they thought nothing of it. They were like, okay, great. Our AI can think better than humans can program better than humans can. All right, so here we go. We're coming up to test that high. Yesterday's low, to see, do we get new buyers or sellers up there? So we know we want to fill the gap, and we know we got stops up there, so we're expecting the market to pop higher. But can we keep the ticks above the zero line? Can we bring in new buyers? That's what will be important. If not, it's a gap and go. They can reject off and head lower. So we'll see what we get here. But anyway, so the AI people who were working on the AI and fed in the chess, they didn't think anything of it and they just let it go. Well, then chess people who are like obsessed with the game of chess, like people who are like world leader chess players, went back and started analyzing these games. Okay, started analyzing the chess games of this AI versus this, traditional style software. And you can go watch on YouTube. There's like, 5-hour-long YouTube videos where these chess masters walk you through step by step every decision that the AI made. And essentially what they say is no human being could have ever thought about playing chess like this. The way the AI plays chess is it sacrifices all its most important pieces. Constantly throughout the game, it just fucking kills off everyone. But what it does is, in the process, it slowly builds the opponent into a corner where the opponent feels like they're winning because they keep taking important piece after important piece after important piece. But they don't see that the AI is like 16 steps ahead. They don't see that the AI is like setting them up for failure. So the AI just sacrifices piece after piece after piece and builds the other computer into a corner where out of nowhere, the other computer realizes that it has no play. And then the game always ends in like a checkmate or a stalemate because there is no move they can make. And it's like when you watch these nerds that are like super into chess, when you watch them watch the game play out, it like blows their mind. It's like the craziest thing they've ever seen. They're like, oh my God, who would do that? Who would make that move? Who would do that thing? That makes no sense. Like no human would ever do that. But like an AI doesn't think like humans. It thinks like a computer. It thinks scientifically. And so it doesn't care about sacrificing most important. It doesn't care if its queen or whatever dies. Who cares? That's just a piece to it. The goal is winning the game. And so suddenly I realized that's what we're seeing in the markets now, is we're seeing this move, constantly these moves and these manipulations right at very, very key points that are just not human. It doesn't make any sense. No human being would do that. Who was buying the market this morning down here that suddenly stopped buying a tick before getting into yesterday's range? It doesn't make any logical sense. Well, that's because we are not trading against humans, ladies and gentlemen. We are trading against computers. And they play by an entirely different set of rules. So with that, I will say goodbye. Happy Friday to everyone. If you are in the brigade, head on over to the private stream and I will see you there. Have a good one, guys. Bye-bye.